S&P's first red day since the election. Let's get into it. We have some huge earnings beats after hours. A couple names are up 16% at the time recording to this. We'll get into those as well and what kinds of trades are working really well. CPI prep for tomorrow as well. But let's just deal with the bottom line. You can just see we really didn't go anywhere, but we do have that red day. Drill back down into this, into the hourly. And you can just kind of see the slope. Not usually crazy about this kind of stuff. I don't usually want to see that kind of rounding pattern. And I got a couple things here that really concern me, and I'll point them out. But you're just starting to round a little bit here. It's not great. You can start drawing your trend lines, and you can see where your trend lines broke. I don't really get that into this kind of stuff. We're going, oh, look, I broke the trend line. I do, but I don't. Not when you're setting up and you have a new shift. I don't really play that game. I'm more interested in where the guys are and the girls are that are buying. And are they buying more as it goes higher? Or are they testing out some of these supports underneath? And sadly, we're starting to test out some of these supports underneath. And you see this starting to kick up in here right now. And I think that's part of an issue. Let's drop this here for a second so I can start using this line. All you do is click that arrow. People always ask me how I do this stuff. You just click these arrows and you put this stuff right here. And then it just appears right down here on the bottom. It makes it super easy. You can add text and everything. It's really, see, then we can just drop it. Now you don't have to extend those arrows out if there was something over here. Anyway, I get asked those in the comments a lot. How do you do this or that? So when I do those things, I'll start pointing them out. But if you watch that level, you could say you're at that 6,000, and then really, where's that put us? If you kind of see that level right here, you can watch that. That could get you back down to that 5,900. CPI, I really want to go through what I'm seeing today. One of the people that really nailed it was Goldman. We're going to go through their stuff, or JP Morgan's. I haven't decided yet. JP Morgan might be a little bit better in the way they broke it down, but actually they did break it down a little bit better, a little clearer on what their expectations are. But you don't want to break 6. You really don't have anything here but air. From this standpoint, take it to a 5 on 15, meaning 5 days on 15. And what do you look like? You look like you're like over the rainbow, right? It's not ideal, guys. What I do like is I like the hold. I like the fact that you held. So what I would do tomorrow during CPI, if we sell down, we'll be live tomorrow for it. But if we sell down, I think it's at 8:30. We go live at 8:15. So we will be ready. Just subscribe to the channel. Click all notifications so that you are made aware when we do. It's actually a pretty good time. We go over it and do the live trading actually in it and break it down line by line. And when you saw what happened with the bond market today, you're expecting fireworks tomorrow, candidly, which is interesting because you have an election and you would think it wouldn't have that weight, but it's definitely got people jumping. We'll show you. See how you're holding right in here? You're just going to want to mark that level. What I like to do with this kind of level, especially in CPI, is just put an alert there so that if it does go, I'm notified of it, but that needs to hold tomorrow. And you can see that we're really struggling a little bit now with this area. You're actually getting to that point where you're hitting those you're hitting lower highs, and you really don't want to be doing that. You can mark them off, but how much significance are they going to have tomorrow? I don't know. I'm actually surprised that we're getting this much selling ahead and this much concern ahead of CPI. We saw a lot of bond selling today, and I saw a lot of put buying today in the indexes. Take a look at the NQ for a second here. Based upon the comments during the weekdays, I'm going to try to get these a little shorter during the weekdays so that they're easier to digest, just from time's sake. But if I can, I can. If I can, I can. But I do think that maybe the shorter time frames are a little bit better on the weekdays. Try to get it under 20 minutes, we'll see. Left shoulder head, right shoulder neckline. Breaks the neckline. For sure we're going to break down, right? But what do? We don't break down. So if I clean up all my nonsense and we just look at this, let's go back out and do 5 by 5, which is just really 5 days over a 15-minute, right? And you look at that, what do you have? Well, it looks the same, but it's not really the same. You have some differences here, and I'll point them out to you. One of the core differences here between the NASDAQ and the S&P that needs to be paid attention to is right here, and you can see that level. I actually like this because you can actually put text right there, like this happened on this day, and then you just leave it on. But if we take a look at this level and you watch how you're acting right here, what do we see? What do we really see there? Well, we see that rejection. So you're rejecting Thursdays. You're not doing that on the S&P, and I think that's very important. For me, this level, when you cracked, you would think that's it. And then you could kind of walk through this and say, okay, well, there's my left shoulder, there's the head, and then there's the right shoulder. I mean, it's pretty blocky, but it's there. I mean, it's pretty textbook. You cracked, undercut, oh, that's it. We're definitely going to go lower. And then what does it do? Goes right back into the fold. So the question really becomes is what's going to get us out of this impetus? Like what's going to move us out of this range, if anything? Now, what I like to do with this when I see it, if you go from Thursday to 9:30 on and you come across to here and you say, oh, well, the market's been on fire. Well, has it? Because since Thursday, after we broke out, where have you been? You've been in the same trading range. Maybe you're up for a little bit up here, but the majority of trading is taking place in this window. So I would keep that in mind, and meaning that whenever we're getting out of that window, what's happening? They're popping us back into that window. Right? Whether it's below it or above it, doesn't really matter. They're popping us back into that. So this is a block of area that they are very concerned about, and they want to keep us in there. For what reason? I don't have a clue. But a hot CPI tomorrow could get us here. Let's do that now. Now, in front of us is just trading economics, and it's probably one of the best sites out there. It's very simple. I use investing.com too. I like this one because I don't have as many ads popping up, and I like to use free services so that people can see. So core inflation month over month is 0.3. Core inflation year over year is 3.3, 2.4. 2 is what we're looking for. Now, a lot of numbers on this street, a lot of people think this is going to come in higher. And the reason for that is you have an election year. Remember how non-farm payrolls got reinstated? If you were going to clean house and you wanted to reinstate something, do you want to do it now? Probably the time to do it. So a lot of people are leaning and they're trying to find ways to say that, hey, this might come in a little hot. The other thing about this tomorrow, you're going to want to watch the 17 bill auction, and you're going to want to watch how Fed speakers respond to it. But you're definitely going to want to watch the bond auction. But let's take a look at this breakdown. Now, this is from JP Morgan, and their CPI preview is here. CPI sees headline 3.2, which is higher than 3. And what they're looking for here, and core month over month printing 3.6. So we just showed you 3. They're saying 3.6, which means the street will read that as 0.4 because they round up, if you see that. Both numbers are above the street, as we just pointed to it. And remember, they will round that up tomorrow across the board. You'll have to dive into it. The street doesn't dive into it. It just moves. This equates to 2.6. We just showed you 2.4. 3.4 versus 3.3. Headline year-over-year number, remember, a 3-month high, while core year-over-year would be a 5-month high. So inflation is heading higher. But wait, there's more. There are a couple key things in here that I thought were interesting. If you get above a 0.4, which they're saying is going to be 2.5%, then chance of that. They're saying the S&P loses 75 basis points to 1.5. But, and I don't want to go through all of it for time's sake, but what we're saying is that they're saying Magnificent 7, you could start seeing money flow back into, even with the market dropping, because they can show that they can have earnings. I think that's a stretch. What I thought was fascinating is here you are at 30%, 0.35, 0.4, loses 25 basis points, 50. And then there's a 40% chance you come in line to 30 to 35. And then you could start seeing them get away from the Magnificent 7 if you start getting weaker and weaker. I think they're reading too much into them using the Magnificent 7 to offset inflation. Is the way that I'm reading into this. But they're saying there's a 70% chance between 0.3 and 0.4, which lets you know anything out of that is an issue. Now, for time's sake, we just did these as a screenshot, and that's why you have the dead space here. But 2.5 to 3, what does that get you? 50 bips to 1%. And this is an environment where you see in everything rally, financials and small caps. Yeah, if you come in and inflation's much lower, yeah, you could rip. That is very possible. Below 2.5, and they're saying, oh, we're going to add 1%. I'll tell you right now, you come in around 2.5 or lower, market's going to rip tomorrow. That would be really low. That would be really impressive because everyone's betting it's coming in high, which is kind of interesting. We're going to walk through how I usually look at this, but I'm a little suspect of some things. 75 basis points, 125 if that happens. I don't see how that could possibly happen, but weirder things have happened. What are the options pricing in for Wednesday? 70 bips move, NDX 90 bips, RTY 1.6 move. So if you wanted to play the volatility tomorrow, what do you play? You play RTY, right? Because that's what they're telling you, that is going to be the most sensitive by 2 to 1 over the S&P tomorrow. Okay, that is pretty telling what you should be trading tomorrow morning at 8:30 CPI. Now, one of the things I really like to do is to look at crude oil, and I'd like to break it down line by line and see where we are month over month. So for example, if here is July 1st, and then you would go to July 30th, for example, what you're going to do is you're going to take this window. And when you look at that window, we'll do August 1st. And you look at this window and you would say, okay, well, this was the price of crude oil. 2/3 of all GDP earnings are controlled by crude oil, whether or not people want to believe it. It's just a fact. So that would mean that that's how you determine if CPI is going to come in hot or not. It's one way to look at it. What I see here, what's so fascinating to me, is crude's plummeting, and they're still saying it's going to come in hot. So then if you go from here to August and you go to August 30th and you start marking this off, because that's going to give you September's number, right? So again, when they report, they're reporting back from the month before. So then you just go here to September for a second and get to October. And then if you just would look at what's happening to these numbers. So in other words, if we went to here and we drop a line, here and we drop a line, that's the wrong line. It would have been way better if I did what I needed to do, but clicked the wrong button, and we're not going to have time to edit that. They actually made a meme for me on this. See what's happening here over and over and over again? Now watch, okay? See how this one on October 1st pops over that? So even though it's down, it's up over that on crude oil. Even though crude oil is here, you're up over that previous level. I think that's something that could have them a little concerned on the average price. So what I'm suggesting is that even though crude's lower, on average, it's higher month over month. This could lead to some issues with CPI. I'm concerned about a restatement, and maybe I'm in the tinfoil hat camp, but we just restated how many jobs, how many millions of jobs on non-farm payrolls over 12 months? If you were going to clean house, this is the time to do it. And maybe that's a little too tinfoil hatty for a restatement, but if you were going to do it, this is your time. And with seeing the crude oil up higher than it is previously would mean that they might be underestimating what the CPI is going to come in. And JP Morgan and Goldman are both higher than the estimates on the street. So there's something out there. Take a look at let's look at gas. Let's go that way. And if we just did the same exact process with gas, and we'll go to July, and that's going to get us to that. And then just go to the next date and just go to right here on July 31st, August coming across, and then you're just going to drop this on the 30th, right there, right? Okay. And then actually, let's move it over to September. So we have it on the exact date when the new one starts, and then you can see when October starts right here. So if we do the same exact thing with gas and we drop it here, drop it like it's hot, everyone know that song? Drop it here, and then drop it here, what do you get? The average cost of gasoline month over month is going to be up. Literally, there's no way that the average cost of gas is not higher than it was the previous month, because you're looking right at the futures market. So unless gas companies aren't hedging their futures, which newsflash they are. So if we're seeing that, someone say, well, it's just a little bit. Yeah, those little bits month over month add up, guys. So I don't know. We'll see when it comes out. I purposely think that you see something kind of wacky tomorrow. And I think the market's acting that way. I'll give you my 2 cents on it. If you take a look at the 10-year, this is where we closed. I understand. Well, it was Veterans Day, and then they had the ability to sell bonds the day after. They didn't have to sell bonds, guys. They could have bought bonds. They sold, and they sold all day long. This is yield. Yield went higher all day long. Take a look at the 20-year and what they did here. And I don't mind. It's my favorite kind of market because you're going to be trading all over the place. This is the kind of market that's a lot of fun. Take a look right here, and you can see how this is acting. It's acting fantastic, right? If you're short, right? There's a little joke right there. But you see how you're breaking down? I thought it was funny. But see how you're breaking down right there? That's not great, guys. That doesn't instill confidence that you're going to have a weak number tomorrow or an inline number. They're selling bonds ahead of it. Take a look at the dollar. A strong dollar is usually a sign that people want to own the currency versus the exact opposite of what they want to do in Europe. Why? Inflationary. So we're seeing a lot of this, and I think that's really important. One of the other things that I should probably carry through as well, a lot of people keep saying gold's going to go higher, gold's going to go higher. Guys, gold was going higher because central banks were buying gold. The moment that you had an election, they stopped. So it is not being used as an inflation hedge. Central banks were buying gold. They were building this whole currency with bricks. As soon as you had an election and it was over and they saw the way it went, they stopped. That's why gold's breaking down, not because of inflation. You can actually chart the move in gold, and I think I did it in Saturday's video. You can chart the move in gold when it started, from when the Ukrainian war started. And when the sanctions kicked in, everybody sold dollars and they bought gold. That was the trade. The new election, that's why it's dropping. This is going to get pummeled, and it's been getting pummeled ever since when? Say it with me, the election. All right, let's get to a couple charts here. Number one is IGV. We've been yammering on about this for some time. These software names, they were just buying the living heck out of. They continue to lift and move higher. What's fascinating about it doesn't really matter what the market does. It doesn't matter what's happening with the bond market. It doesn't matter what's happening with the indexes, currency, geopolitical situations. Look at this chart. It's crazy. It's just up ever since the 5th. It is just straight up. Why I think this is because corporate taxes will drop. They will spend more on product. Everybody thinks that. And that's what's happening here. And some of these names just look absolutely fantastic. So if you take a look at them, like take a look at Crowd, for example. Crowd has worked its way up since the 5th, but you've had zero pullback. Now you're at that gap fill, and you're just sitting right up there building. And there's some other names that just look fantastic like this. Take a look at Adobe today in that breakout on volume. You just see this push straight up. But you are really in my favorite kind of market. I love the volatility. I actually feed off of it. I like trading a lot. I do the swing trades, but I love trading in this. For example, micro strategies, these kinds of moves where, oh, we're down $10 after hours, but then you come in the next day and then all of a sudden it's up, precipitously. Even if it drops down, it doesn't really matter. They're just giving you opportunity after opportunity to trade this. For example, today you can see that break up, gaps down, forms a hammer, breaks up, and then you just either do the gap fills, you're letting them go higher. I really like this kind of trading. I really like seeing this kind of volatility. It makes it a lot of fun to trade during the day, but also it's healthy because it means that you're getting actual risk for the reward that you're getting. It's very different than before, and a lot of people that have only been trading for a couple of years are not used to it. This is how tech trades. This is how tech is supposed to trade. For example, when you look at something like Tesla, same thing. Take a look at these levels. Let's just drop a line there so we can get to this. And what I would suggest with this kind of thing, when you look at these levels like that, you can see where you're trying to hold, right? You're trying to hold the previous day high. You're trying to hold, maybe you get to the close. I thought you might get there today. You didn't. Short for a little bit, did okay. Tried a long here. That did not work. Got the kibosh. But overall, what are you seeing? You're seeing the breakouts and the pushes, and they're working, and you're buying the dips, and then you're trading them out, and then you're selling the rallies, and you're trading them out. It's working over and over again. What's not working is committing one way or another. That's not really working. You have to be in there, and you have to be trading them right now to actually kind of maximize these. Just the spray and pray of just holding, it's not going to work the same way. A lot of people can't hold the leverage on where they were before with the volatility that's going to be normal. You might want to listen to that again. I can give you a great example of this today. So coin was one that actually came in short, and we were short this overnight, had some puts on it. And it was toppy in here, and you could see that it was toppy. I'll show you how to tell this in a second, but let's pull this down for a second. We'll use RSI. I love when people say that this doesn't work, but you can start seeing the lower highs in here, and then you can see the higher highs in there. Actually, let's clean all this off. And what you're really looking for, you see how you broke above there, but then if you came down to this level, see how you didn't break there? So when the RSI does that, it's a negative divergence, and it just lets you know, like, hey, we can't keep going. We're going to either flatline or we might start to roll. So once you tried again and failed, it just provides an excellent opportunity. I shorted there, and then I just did pretty well, and then I just kept it and closed it in the morning. But this is why this market's so much fun, because what you're doing, you can take both sides. So I'm closing the puts this morning, and then it just does this perfect move where you form this doji, and then you do the undercut, and then you have no follow through. And the moment, like right here, when you have no follow through, that's all you need to say. Because what you're doing here is you're looking for that follow through, and instead you get a doji. Dojis are what? Signs of uncertainty. As soon as you push through, that was it. You knew to go long. And what's great about this is usually you get these kinds of gap fills. So your RR, risk versus return, is huge. And that's why I like this kind of market, because you do get this kind of volatility. And if you catch them the right way, it's much better to trade than just the grind. So basically you're buying in here, and then you're using this as your stop. And then you're looking at that kind of return. For example, in this situation, you're looking for something like 15 points. And this is exactly what we did today. And we're trimming into it in case we're wrong. But this exists, and it exists every single day this week so far, and I expect it to continue. Here, watch this live. Yeah, you're going to go. We're going to buy coin here, and we're going to give it a minute or two and see if it can flip here. And if not, we'll just blow it out. Coin up $1.50, pulled out something, up 2, pulled something out. It could just as easily reverse on me, guys. Just as easily reverse on me. Pulled something else out. Keep going. You know you want to. Just get up high enough that I don't have to worry about you anymore. Coin, you're going to go. All right, so now your gap trimmed more coin. If you do the undercut there, there's nothing for me to do with the rest of it, except I can use my stop at the low. Coin 318 keeps going. All right, where's the gap fill? 323 is the target. Are you going to push or are you going to stop? Is that it? I don't trust this thing as far as I can throw it, but we're up enough in it now that it doesn't matter. So keep going. Coin up 10, trimmed. Nothing for me to do. Just leave it alone. Watch the break even. See how that goes. That's not what I'm looking looking for from something that I like. That's the exact opposite of what I expect from you. So therefore, you're removed from the island. 100% out of coin. I'm super early getting out of these guys. Just FYI, I don't care. I'll let them set up later and come back to them. Now, for me, trading, I would much rather trade like this, and everybody trades differently, than buy it here, hold it, watch it go back to here, watch it come underneath. Maybe it's going to undercut me. I'm going to get stopped out. Now I'm break even an hour and a half later, kicking myself. Then I'm holding overnight. Then I'm at 311. It's exhausting. I'm exhausted just explaining it. So to me, trying to do that, where you're trying to time, like you're going to catch the next Tesla that's going to squeeze, but then you don't know when it's going to end. It's going to end when you're max long, guys. Just in case you want to know when it's going to end, when you're the longest. That's when it's going to end. What you want to do is you just want to develop a process that works. And once you do that, life gets easier. I'll give you another example, and you should follow these tomorrow anyway. Kava had a great quarter. One of the things we do really well is just trading after hours. A lot of people don't like doing it, or they don't want to learn the time or spend the time. But once you know what to look for, and you look for the fundamental analysis, this was a pretty clear buy. I'm not going to get into the trade and how we saw it, but the clean thing here is the 3 bars. 1, 2, 3, breaks out, and then it goes. And then it did it again on a 5. Patterns are patterns, guys. 1, 2, 3, boom, pushes here, and then it goes. There's still 4 or 5 points there. Whether or not you want it, it's up to you. But what you're seeing here is a really solid quarter, and the comps beat. So, yay, salads. I'm surprised that you're up $20 because, salads. I mentioned that they just do salads, and then someone said, no, there's rice too. Okay, but nonetheless, it's a lot of movement for rice. But seriously, they killed it. The sales comps, which is what you want to see, that's how these companies usually move, sales comps, store comps. We're looking for 12. You came in at 18%, which is pretty huge, guys. So it's a really nice beat. Cart, not so much. A little weaker there on the gross margin side. Kind of surprising for as much as I use them. It's a joke, but I do use them a lot. RKLB, I have not walked through. It's up. And I just want to show it. It did miss, but it is up. I have not listened to the call. Spot nailed it. Rev's guidance was in line to down, but they nailed it. Like their growth, sub growth was just through the roof. And you can see it all over here. You can just watch it. I watch it every single day. And it's pretty easy to trade, specifically trading into earnings. Watching tomorrow what comes out. Beezer will be the big one that I will watch tomorrow and what they have to say. HP, but what will take center stage will be CPI. And you may even, candidly, just get a relief rally on CPI just because it's over. That is it.